Well, this is certainly interesting times, and look what the cat has dragged back out of retirement, so to speak. Yes, no, we just haven't done a YouTube video in a long time. Where do we stand? And let's take a look at the market condition. We did see a new breakout in the Qs and the relative performance of the advanced decline. So what does that suggest? It suggests we have possibly more upside coming. Decent volume here in the Qs. But look at the Dow Jones Industrial Average. The advanced decline was down. So basically it just says money just came a little bit off the table in some of the Dow, and it's now rotating into the Qs. The S&P 500, though, is showing some signs of deterioration. We're going to need to see this over the next couple days. Why? Well, we broke out to a new high, and as you can see, the advanced decline did not. So that's cause for the concern. The Russell, top end of a trading range, and that's what we boxed here. So what's the moral of the story? We're going to first start with top-down approach. This market is gyrating. Money's not coming out. Money's swashing around. It's going from one space to another to a degree. Let's take a look at some other interesting aspects. So bottom line, what does this information tell me? For the Qs, this is a specialized indicator. It's Sherman McClellan's oscillator, but we modified it a bit. Number one, and that's why we call it the JP MEC oscillator. We modified it to reflect the data in the Qs. We did the same thing over here with the Russell. We did the same thing over here with the S&Ps. As the price goes up and the McClellan oscillator is going down, it's showing some relative weakness in the breadth over time. This is just suggesting that we're getting closer to overbought, so it might have a little bit of a rip to the upside, new highs. And then we got to watch for that at the end of this week with June option expiration. The Fed meets Wednesday. So my take is this could be the last, gasp, hip-hop, hooray rally before we see any type of a pullback sometime in, late June, early July. Certainly there's no volume behind this move. Even my own proprietary volume indicator is suggesting it's a divergence, but we just don't have the sell signal. So if you're going to buy and you're going to go long, what sectors should you be watchful to be in? Let's take a gander. Right now, we noted that we had a breakout, and that's this is from our live trade room. Just to give you an example of our current positions per our newsletter, we are long Exelon. Today we bought right around 66.11. We bought the actual utility space, XLU. We did not, we've been tracking Labu and taking buys. This orange represents for those that were in our live trade room, and I'll bounce this up a little bit for you, see if we can get this into a full-time, or full picture actually. Here we go. We were looking for a buy. The green line means buy the breakout of the green line. The market went up. We suggest to take something off the table ahead of the weekend and use the orange line as a stop loss, a trailing stop loss. Labu is a 3-time leveraged ETF on the biotech. We have huge volume in the biotech, and I do expect some more follow through. The red line is the profit target on this trade, the minimum profit target. So we have good PMC is the relative strength. This shows that the market is it started to improve relative to the market, and bright blue means the biotech space, or at least Labu, outperforming relative to the market. Now, this is Thinkorswim platform, friends, that you're seeing, and everything on here are the John Person indicators. You have the PPS buy and sell indicator. The last known buy signal was right over here on May 27th. It remained in a buy signal and has been breaking out. You have the PMC and Person's pivots. This is just on balance volume. That's not my indicator. But needless to say, we use the OBV to help track and to look at the trend of volume consideration. All right, that's what we're doing there. So you got an idea of still more upside coming out of Labu. Red line should be first resistance spot. Exelon, this is a utility stock. I know, utilities, like how pathetic. I get it, but it's still doing great. So the utility sector is a seasonal thing. This thing had great relative strength, and look at the volume trend of this market straight up, right? So I don't think you can laugh at this. It's not a Reddit Wall Street fast money, quick, easy type of move like we saw with name something from these guys. When they decide to pound on a heavily shorted stock, they produce results, man. These guys, they've got their game down. It's awesome. But that would be kind of like your AMC, your costs, your other higher velocity type. I wouldn't consider that an investment type trade. What I'm looking at are more investment type trades, swing trades, something that we should see continuation for a time being. So Exelon is one that I see as further gains going forward. How much further? I mean, I think that easily we can account for the market to get back up in a seasonally strong period and a demand-led type of product like a utility in the summertime, which is why we see seasonality. Hot heat waves, people turn on the AC. Anyway, they produce more income. The volume on this trade is looking great, and I see at least some more upside, at least another, let's call it 5 to 8% to the upside, just to challenge these highs, and likely we'll reevaluate that trade. Next, in the live trading room, we're in a position in Intel. We're long Intel. We noted today, this is Monday, of course, that there was unusual volume, not option volume, but unusual volume in Twilio. It jumped up on our scans using HDSI as well as the Thinkorswim scan function over here. Airbnb is another one that I'm looking for some massive upside. And then finally, Apple, which we covered today, this morning before the open, which we noted that Apple had some pretty strong volume trends, not from unusual option activity, but this actually generated some very strong volume from last week. Let's take a look. So here's your volume trend going up on a daily chart. We broke out above resistance. It's above pivot. We're calling for the market. The first resistance is going to be right here around the 131 and change. Next resistance around 137. As it turns out today, there was some really big option trades going on for the weeklies and the July 2nd expiration. So we got next week the June 25th expiration, not the June 18th. They're bypassing this week. They're going into next week. Huge volume in the 130 strike calls for next weekly options. I think something like 30,000 or so. And then more importantly, and that makes sense because let's look at a weekly time frame. You know, the options that expire on Friday expire Friday morning, not Friday afternoon, right? So bottom line is when we look at for the indexes, anyone that's beta trading with an Apple trade for the end of, like for example in the SPYs, the index options expire in the morning, right? So Thursday's your last time to trade on the close. I think if you're looking for a continuation trend, or maybe there's more news story coming out on this trade, you're more than likely have an upside potential. It may take, and again, look, this is a weekly chart. 1 week, maybe 2 weeks to get back up to around 135, 137-ish. That's the objective up there. Clear this one red line here, jump up to the next red line. That's the resistance, and that's why we got that trend line up there in that. Green is good for buying. Wait for the market to break out above the green line. That's what we did. We talked about that in our live trade community this morning. Right on the open, bang, look at that. So we've got some follow-through strength on exceptional volume on the underlying stock, and that also translated to exceptional volume, the undertone support for the market attracting volume in the options. So we've got a little exposure with the Apple, Twilio, we like Airbnb, PayPal is another one that we believe has got some longer duration upside performance. And then last but not least, let's take a look at our live algo room. Today, coming in the day, it was a strange day because we were looking for the market to break, and it needed to break specific levels, which we never did. Let's take a look. What was my levels? What was my magic line in the sand? And here I bring this up. We posted in the room, guys, even though the market looks weak with the advanced decline, we need to break the pivot level, which is this blue line. I'll expand this so that you can see it because this is very important. And this is just amazing. I love this setup to keep me from making big mistakes, right? So no matter how bad I think the market might be and how lush and ripe it is for a pullback and a correction and how much people believe it can't go any higher, listen, I want to sell when the market confirms it's going to be weak. And for me, this is in my book that I wrote 15 years ago, that concept with the last conditional change. Look at this bar right here. It's got a PPS buy signal. We traded through that level, but we never closed below that orange line in the sand. That line in the sand, I drew in. It's a discretionary line. It's a last conditional change. Old high, new low. The market has come and tested it. This blue line is the weekly pivot. If the market truly is going to be bearish, I mean, there's a lot to go down in this market. So why test fate? We dipped and we traveled and we tripped and we tried to break that pivot all day and we just couldn't. And I think there were some shorts in there were banking big bucks that we were going to break. And our comment was, do not sell unless we get not just one, but two or a 90-minute close, cheating a little bit. Two 60-minute closes below a line. What we've seen many times before is a market goes down in one 60-minute and the very next bar goes straight back up. We call that an equal and opposite. A lot of people look at the sell and they get short and then they get jammed. It just reverses on them. So what negates that equal and opposite, the bar down right by the next bar right back up in your face? Two 60-minute closes or a 90-minute close below a support. And we just haven't gotten two back-to-back 60-minute closes below a major support. So that's the work that we did in the live trading room today. Let's move on and take a look at how the algos performed and what we see going forward. First off, they went long earlier today when we had a kind of a negative advanced decline. 185 stocks in the S&P were positive, 315 were negative, and we just, still it did not matter. It was based on the cap weights like your Apples and everyone else in the tech world that just ran this thing right up straight through the roof. The SPY models were flat. The SPXL was long. It did get tricked out on a small, tight stop. There was our stop loss that was initiated. So, all right, that happened. That's a great model. It's been doing quite well for us this year. The VXX is a short. It's the ETF on volatility. It had been short. It covered its short position. I'll share this with you real quick. Bottom line, this runs in our live trade room. We do not have a long model. It's short only because in bull markets, volatility goes down, and this is one that is more geared towards selling after rallies. And as you can see, it's had quite a good run in the market so far. All right, let's double check and finish up real quick. I don't want to bore you with too many more details. The SQQ went short, took a profit. The market spiked, went short again right before the close. As you can see, SQQ is still short the market with a small profit towards the close of business. But it was that S&P market right there going long at approximately 1235, dumping at approximately 1255. That's a big 5-minute model for us in this live trading room. Bitcoin on the other side of the coin, no pun intended, it's a big performer, this model here. This is our Bitcoin model. It had gone short. It did not it covered its short position. It did not go long until today, and it just got stopped out. It's kind of choppy and chewy in here, but the moral of the story is it's done quite well this year. Let's look at the overall performance. So the performance graph will pretty much show we just hit a new equity high. We had a little drawdown right in here. So the moral of the story is the Bitcoin, this has just been, this equity curve is fantastic. This is the GBTC. It's not quite Bitcoin. It's the ETF on Bitcoin. And this is the one we run in the room all the time. At this point, it did generate a buy on the gap higher open. It had a tight stop. And at this point, it's flat, the market. So we'll see where we go from there. As far as Bitcoin, and as I'm concerned, this particular market, these are the trades that we have, and when you see them enter a trade live in front of our clientele, it populates right up here and shows you the strategy, the time, the entry, the profit or the loss, and it just accumulates until it gets out. So green line connects the dot when it gets in to out, and red line connects the dot when it's a loser. And then that's how, whether it's longs and shorts. And if it's an open trade position, it shows it right here, as you can see on the SQQ model. Here's the entry. This particular model scales out. It scales out a half the position, and then it trails the stop on the balance. It hit its profit or trailed out on a stop, and then something happened this afternoon, and it went right back in and then carried in a position. This is another dynamic performer for our live trade room community. This is the SQQ is an inverse on the Qs. In other words, when the NASDAQ goes up, this goes down. So we use this as the short model. So what do we think going forward? My personal belief is that the overall market, S&P 500, running this thing up with a weakening breadth structure like we did today, if we continue to see the market rise on weakening breadth, it's going to just be one of these days we're just going to yank the plug, and it'll be sooner rather than later. Maybe it's after the Fed, maybe it's for Wednesday, so I'll keep you posted. But when a market goes up and the overall trend of the advanced decline starts to weaken, it's really not a great sign, and that's what we're starting to see. But in the meantime, it doesn't mean we can't take these powerful short-term trades. And I would say that Apple could see 132 to 135 in the next week to 10 days. And after that, maybe we get the July swoon that this market might need. I mean, too much of one good thing is generally not that good. And that's coming from the guy that's been around since the 80s. And, you know, we went through the crash in 87, have been through the 93 market, the 97 long-term capital management, Alan Greenspan, 2000, the tech wreck. So too much of a good thing, the housing crisis. So, again, there's a little froth in the market, but for right now, we're enjoying the upside and also enjoying the fact that there's some really strong sector rotation occurring in this market. Almost on a daily basis, and that's a new phenomenon, and I think it's going to be continue to provide some decent trades as we move forward. Right now, the focus is tech, biotech, and utilities had a strange good day today, and one wouldn't expect that in a blistering bullish market. So that's more of a defensive play. So stay tuned. Thanks for watching, and I hope you found some value out of the video. Because we haven't done one in quite some time. Thanks again, everybody, and we'll update you as conditions warrant.